Kelly, you heard from Sachin Kajuria there of Achilles, small cracks starting to form in the market. Where exactly are those cracks in your view?
Yeah, specifically in the world of high yield bonds, we see those in the cable, media, telecom, satellite space. So TMT overall has been really a lot of landmines to navigate. We've had multiple large capital structures that are in the process of some liability management exercises. So those are tricky to navigate. If high yield overall is at 8%, a lot of those names are averaging more like 10, 11, 12%. So you're seeing that's the segment of the market that's really quite wide. I thought some of those comments were interesting around leveraged loans in particular, because when you really look at that whole market, on average, about 80% or so of all names in the loan world are actually trading over 98 cents on the dollar. So yes, there are some cracks, but they're quite modest overall. When you look at high yield, the distress ratio is just around 5% or so. So those capital structures have already priced in that risk. We feel like that's really where the future forward-looking defaults or out-of-court restructurings are going to come from. So at those levels, it does still feel pretty manageable overall.
Well, Zach, and I'll ask both of you this question. This idea of people not too worried about downgrades here or deterioration in credit, money flowing in ultimately to both of these indexes, high yield and investment grade. Where does that leave you on valuation for getting really the dollar for every dollar you put in?
It's a great question, Sonali. And right now we have market weight allocations to both investment grade and high yield. We downgraded that with our 2Q outlook, really thinking that while spreads have tightened in quite a bit, we are looking for them to drift a bit wider. And so when you think about the elevated carry that you get from high yields, even though you have tight spreads, that looks pretty attractive. But from our perspective, it doesn't merit an overweight allocation. We're not looking for further spread compression from here. But even though you are perhaps seeing some small cracks, we aren't seeing signs that we're going to have a huge spread widening in the market this year. And so we're looking for high yield to finish the year around 350 and IG at 100 basis points.